So I'm Phillip Bruner, Professor of Sustainable Finance, University of Washington Foster School of Business, and I'm the Director of the Climate Risk Lab. We had a conversation with Amazon, who's one of our funders, early on about actually doing a 4-part event series. So this is the first of 4. And we wanted to initially do something on housing, mainly because the topic is one that's important to a broad range of stakeholders in Washington State, but also because it's just in the news more and more. You see premiums are going up for different hazard types. Florida is experiencing withdrawal of both mortgage coverage and insurance premiums and properties that are exposed to sea level rise and hurricanes. Over here in the Northwest, it's wildfire. So it's literally a hot topic, no pun intended. And it's an area where there's a lot of concern across these different interest groups.
For those of you who don't know me, I am Patty Kuderer, and I am honored to be serving as Washington State's 9th Insurance Commissioner. And I've always believed in public service, and I believe that it's about protecting people, especially when they're at their most vulnerable. And that's exactly what the insurance system is supposed to do: provide a safety net when disaster strikes and a foundation for stability in everyday life. But that safety net is fraying under the weight of climate change. So when I talk about modernizing insurance, I don't just mean tweaking regulations. I mean fundamentally rethinking how we understand and price risk, and how we make sure that risk is shared fairly, transparently, and equitably. And that is why the Climate Risk Lab is so essential.
The elevator pitch on the Climate Risk Lab is we're on a mission to make the best climate risk data analysis and tools available to everyone. Our vision is a future where climate risk is accounted for in all organizational decision making. And what do? Our day-to-day work is working with grad students in industry to help connect the two and to translate climate data into dollars. So we're really trying to take these global climate models and look at how you measure those impacts at local scale for businesses and policymakers.
Let me underscore that the lab isn't just generating data, it's transforming data into action. But the lab is not just about tools, it's about people. It's about preparing the next generation of climate risk professionals who take this work even further. Through applied research projects and certification programs, the lab is training graduate students, public officials, and private sector executives to understand climate risk is not just a scientific issue, but as a financial and strategic one too. That's critical because we are going to need a whole new class of leaders who can connect the dots between climate, infrastructure, insurance, and the economy. It's showing us that science doesn't have to stay in the lab and policy doesn't have to be reactive. We can be proactive. We can be smarter. We can be ready. And to all of you here today, let's keep building the kind of future our state and our country and our citizens deserve. Thank you very much for your time.
Well, I think climate change really is about more extreme weather events occurring more frequently, more costly, and becoming more unpredictable. The insurance industry has been the linchpin of the global economy really for 200 years. So, I know the reinsurance market goes all the way back to the London Fire of 1666, Lloyd's of London. So, the reinsurance market has existed longer than the United States. Insurance is literally the foundation on which the global economy sits. And we've had a stable climate throughout that entire period. So climate change fundamentally alters the landscape under which this foundation is built. And we're going to really have to think about how we come up with new innovative products and approaches to help mitigate that risk. And it's not up to the insurance industry on its own. We need communities, we need regulators, we need educators. We need other folks in other industry leadership positions to get involved as well. So we need to have a conversation about how we deal with this changing climate issue going forward. Right, so worked with the panelists as well as some of our student community to come up with a list of questions that we thought would be interesting for stimulating discussion. Dave, while wildfire risk often dominates the headlines, how are flood, sea level rise, and other climate hazards impacting our communities and insurance markets differently across Eastern and Western Washington?
Great. Well, thank you so much for letting me be here today. So an important understanding of financial resilience for wildfire, let's say, that risk is 100% covered under everybody's property insurance policy. The difference with flood is that risk is excluded from every single homeowner's policy. So for those property owners, they're going to need to go out and either get a federal flood insurance policy, and we also have an emerging a private insurance industry flood program happening here in Washington. So the private flood insurance policies are a little bit better coverage than the feds. But you know, one thing to piggyback off what Commissioner Kuderer mentioned in her opening remarks today was a concern that we didn't have a year ago. So FEMA runs, we live in Region 10, that's Alaska, Oregon, Idaho, and Washington State. And so they have an office that runs the federal flood program. Dozens of staff and contractors, they're down to 2 people right now, canceling trainings that are necessary for Washington State floodplain managers. And it's an unnecessary risk that's happening to our state. So just want to make everybody aware of that.
Kicking the soccer ball around with me a little bit there. Let's go back to Trent. So again, the theme here is collaboration, right? I'm going to simplify this question just a little bit. How can the insurance industry work together with regulators and the investment community to help address some of these issues?
It's an important question, not just a good question. I think one of the first things we need to do is work on, I'll call it mindset, okay? And when I say mindset, I mean there's mindset, there's skill sets, and there's tool sets, right? Tool sets, there's lots of tools for helping prevent loss. There's lots of different things you can buy or invest in or do that will help reduce your likelihood of having a loss. Skills, you can learn how to create a boundary around your home. You can learn how to do all these things, that's great. But mindset is what you believe, the assumptions that you accept as being true. And if you don't think there's a problem, why would you use those tools or seek those skills or apply them? So I think helping our state and our state shareholders, stakeholders within this state, change their mindset and see this is real, this is going to affect us all, this is affecting us all. And that's going to be done through education. That's something we can control. It's something we can come together around and say, you know, hey, it's not me, it's not you, it's us. And we can learn and we can understand, we can bring the data to the table.
So to repeat the question, how can regulators work together with the insurance industry and investors, i.e. property owners, to help address some of these challenges?
Well, this is where we're heading. And the legislature has asked Insurance Commissioner Patty and DNR's Lands Commissioner Updegrove to co-chair a working group over the summer that is going to provide recommendations back to the legislature on what should the state's alignment be for wildfire property mitigation standards. We have a lot of silos out here in the state, and this work group's gonna try to align everybody to row in the same direction. Trent mentioned the Insurance Institute for Business and Home Safety, IBHS. This is an insurance-funded research institute based out of South Carolina. For decades, they have done mitigation science for hurricanes, for wind, and they have partnered with the communities, the local states, departments of insurance to create programs to provide state-based grant funding to mitigate property. And in turn, the insurance industry has recognized the reduction in claims that the mitigation results in, and therefore offers insurance premium discounts. And for the states that have been doing it the longest, Alabama, their property insurance market is very healthy compared to their neighbors. And so mitigation is the most direct pathway to have a healthy insurance market. But wildfire is different than wind. Wind, you can put a stronger roof on, board up some windows, and you can mitigate that. Wildfire is an annual exercise to stay vigilant against that type of risk. So we're trying to figure out how to copy something that's been done in other states, but change it here for Washington to be appropriate for wildfire risk. So that's ongoing. We're going to provide that recommendation in December. So the OIC is going to stand up a web page here as soon as the governor signs the bill. So please look for that and participate with that working group. So how do we educate consumers? The First Street's taken a step on real estate ads to post risk. We need to maybe have insurance companies provide disclosures as they're evaluating your risk. You know, we do have companies that are non-renewing and canceling in Washington State. And it is, as Trent mentioned, in pockets where the insurance industry has found them to be at the highest risk. Well, I think it would help the consumer if they were informed of what's your score? How are we evaluating you? What are some steps that we could tell you that you could become less risky, more insurable? And so we hope the insurance industry will head that direction because we think consumers need to know what the risk is so they can make their own choices.
So first of all, I 100% endorse everything you just said, and I agree. We as an industry, an insurance industry, not only could do more, we need to do more to help educate. And so I sometimes get the question, why is it that you with a 30-year background in claims are the head of marketing in your insurance company? When they ask me to be the head of marketing, I'm like, are you sure? Is there somebody standing behind me? You want me to lead marketing? Why? And our CEO said, because you've seen what happens. And you know the devastation that occurs to families and individuals when they don't prevent the preventable. And we want to get that message out. So your job, your mandate as director of marketing is we need to educate our members, and while we're at it, let's educate our communities at the same time. The changes that we're seeing in the weather patterns throughout our world and here in Washington are definitely having an impact on the insurance industry. I'll give you an example. In the United States, in the decade of the 2000s, the number of events that created $1 billion or more of damage, there were 7 on average per year in the decade of the 2000s. Fast forward to the following decade of the 2010s, on average, there were 13 per year that were $1 billion or more. The last 5 years, it's been 24 on average per year. And last year it was 27. So this is a hockey stick, right? This goes one direction, it's going like this. And we can like that or not like that, but that's the reality that we have to react to.
I thought the panel was excellent. They really riffed off each other really well. There was a good vibe, good dynamic.
It was great. It was a really interesting conversation, great perspectives from different places. It was nice to hear the same question addressed from a couple of different angles. It was really nice, yeah.
I honestly think it went really well, and I enjoyed hearing about all the different aspects of climate risk and how that plays into insurance. And I think it's important because people aren't always thinking about the risks when doing something like buying a house or choosing a specific region to live in. And so these kinds of events help to broaden the understanding of the importance of insurance, specifically relating to climate risk, and how we can continue to be proactive in mitigating future risks.
I tried to bring out tensions a little bit in a very subtle way, and everyone was on top of it. I mean, I think the elephant in the room, of course, is, not necessarily property owners, but renters and low-income communities, historically marginalized communities. So what is the impact of more extreme weather going to be on them? And a big part of the solution is education. And each of these groups, you have the investment community, you have the regulator, and you have the private insurance community. They all have a focus on outreach and trying to work with stakeholders to get the word out and teach people about risk and mitigation efforts. So it's surprising to hear the camaraderie between these different stakeholder groups, and also inspiring, I think.
My biggest takeaway was hearing from Ms. Kuderer and learning a little bit about why she thinks it's so important to be thinking ahead of time and really understanding the importance of acting proactively. And I appreciated hearing her conversation and how she started off the conversation. And then I later enjoyed hearing a little bit more about PEMCO insurance and why it's so important to be proactive and purchasing insurance and thinking ahead of time when it comes to climate risk.
Biggest takeaway was how much work is still left to be done. I mean, there's a lot of research going on, a lot of increased understanding of what's actually coming, but we haven't incorporated that into the systems that we have. So the amount of work that we need to do to make sure that we're adequately and accurately reflecting risk is huge.
It's definitely more important. I mean, we have federal withdrawal, so the federal government have decided not to get involved in this conversation. They're leaving it to the states, and I'm grateful that we're in Washington State where the conversation is so proactive. So we're really thinking ahead here. I think Commissioner Kuderer was very articulate in her comments, and her leadership really showed through. And that's the kind of leadership that we need, and hopefully other states will look to Washington as an example. But yeah, the weather is going to become more extreme, more volatile. Trent, I think, highlighted the increasing pace and intensity and frequency of extreme weather year on year. The quote that I always remember comes from FEMA, and it is, we used to have a $1 billion disaster in the United States every 3 months. Now we have one every 3 weeks. So presumably in 5 to 10 years' time, it's going to be even more frequent and costly than that. So we absolutely need all hands on deck.